Good afternoon and welcome to Community Candor, Wealthy Wednesday. We're happy to be with you again on this Wednesday for our talk on financial tools and resources to add value to your life and help bring you wealth. Today's session is focused on insurance for individuals and families. And Community Candor is hosted by Communities First. And today's sponsor is Mass Mutual of Great Lakes. We've got a great panel here, a great special speaker, Ms. Gina Coleman, who is joining us today. So let me just jump right into introduction so we can get started because there's a lot of information to cover. Again, welcome. My name is Renee Kent. I am the Special Projects Manager for Communities First in the Detroit region. And today we have Glenn Wilson, President and CEO of Communities First, and I'll just give him the floor so he can tell you a little bit about himself.
I guess I have to unmute. That's always a good thing. So Glenn Wilson, President and CEO of Communities First. Thank you. I'm here just to support, whatever that we're doing as an organization. But I just want to talk about, Renee, do you want me to just go ahead and tell why we're here today?
Please.
Okay. All right. So why we're here today is, when COVID happened, a lot of people kind of, not even just nonprofits, but what happened is some organizations kind of just went into the shadows. You kind of didn't know what was going on, what was happening. And so we were getting reached out to, from community members, from small businesses. And Renee did a great job of deciphering that information and finding out, what is it that people need. And one of the biggest things was people said, I need information about my finances. I don't know what it's going to look like in the short term, in the long term. And we were getting that information from small businesses and from individuals. And so, she worked real hard, put together this whole series, which has been great and phenomenal, with a great speakers to talk about topics that really mean something. And as an organization with the name Communities First, you can't put a community first without giving them the information that they need when they need it most. So it was, our call to say, let's do our motto, which is empowering people and build communities. So these sessions Community Candor sessions has been dedicated to empowering you, which is giving you the information. But the other thing about information is if you don't implement it, then it's just information. And so we want you to not only listen to this information that you're going to get today from Ms. Gina Coleman, but actually implement it into your life that can help you to build some long-term wealth building in your life for everyday success. So thanks, Renee, for working on this, and Gina for being with us today. And don't forget to share this, because it's not just about you getting information. It's about you sharing the information with other people and being held accountable to doing this. So share this post with other people, and I'll back out there.
All right, thank you, Glenn. And now I'd like to introduce Gina Coleman, who is the ultimate professional, a friend, and I will let her introduce herself and tell you a little bit about her experience and background.
Thanks, Renee. Hi, I'm Gina Coleman. I currently serve as the Chief Sales Officer for Mass Mutual Great Lakes, which is an insurance and a holistic financial planning and money management firm. Within that role, I oversee 3 of our growing sales units, recruiting, are some of the financial education that we do in the market, working with businesses and individuals. And I'm also part of the Collective Financial Group as an advisory member, which is a female focused and female advisor driven firm, which is close to my heart. For the last 9+ years, I've been in the financial services businesses from the banking side and now on the insurance side. Throughout my entire career in financial services, I've had a passion around financial education. And so when Renee came to me with this opportunity to be a part of the Community Candor series, I jumped at it. I have a passion for serving my community. I serve on 5 different boards in the Detroit metropolitan area, but I always have a passion for giving back. And And this series is bringing some very tangible and necessary things to our community to benefit all of our generations. So as Glenn said, share it with your family, create, financial goals together, look back on the series. So I hope you have a notepad and a pen. I want to be able to make sure that you all have my information. I'm going to give you my email, which is Coleman, Coleman, @financialguide.com. And so that way, if you have any follow-up questions after the session, you can feel free to email me directly or reach out to Communities First, and they do know how to get in touch with me as well. So I'm looking forward to today's session.
Thank you, Gina. And we will make sure that we post your contact information throughout this so that if people want to connect directly, that they'll have that information. Also, just a reminder, we will be posting the registration link, and you may see it on the screen. There you go, on the screen as well. If you haven't already registered, please register. This is another way for us to get you information and share with you the tools and resources that we're providing through these sessions. So please register. As Glenn mentioned earlier, please share this information, host a watch party. That's how we inform people, is by sharing this information. So let's just jump right into it. We're going to be talking about life insurance. And the truth is that the majority of the population believe and understand that life insurance is important. But the statistics have shown, over the last couple of years that less than 60% of adults have life insurance. And 30 to 50% of that number are actually underinsured. And what we know is, without doing any surveys or taking any statistics, but just from talking with the folks that we know, people don't like to talk about life insurance. There's a fear there, and there's a real apprehension about talking about that because of what it's associated with. People don't want to think about, their last days. And the truth is there's a real missed opportunity in that, because life insurance is just not about what happens and how things are paid for when you pass, but it's also a tool that can be used to enhance your financial plan while you're here. I hope you heard that. Life insurance can be a financial tool that can be used while you're here. Okay, before we go into anything else, Gina's she's gonna share a presentation with us. But before we start that, we always like to do some sort of storytelling, just because it's easier for, I think, people to relate to stories, to things that have happened to people, and be able to draw from some of those parallels in those stories to things that might apply in their own life. And so I'm going to ask Glenn and Gina just to share, a brief example of a story that they're aware of how life insurance provided a safety net, or even lack of insurance may have set the stage for, a tragic story, a good story or a bad story related to life insurance, to help set the stage for this conversation.
Okay. Glenn, do you want me to go first? Okay. So, I have a friend of mine that, her and her husband, they were doing, pretty good. And the husband had a policy, a permanent life insurance policy that had ever since he'd started working. Got hit got impacted during the 2008 financial downturn. And because he was still a few years away from being able to collect on his pension and get access to his pension. He needed some funds in the meantime to help get some additional cash for. And what he remembered, and in my conversations with them, what he remembered was that, wait a minute, I've had this permanent life insurance policy forever. I think I may have some cash value in there. Sure enough, goes, looks at the policy, finds that he has a significant amount of cash reserves in this policy that he would have access to use for whatever, and can take it as a loan, can take it as just straight cash out, put it back in. It was actually paid for, and it was being used to cover any premiums that were still left over. And so that was just an example of a life insurance policy that was used as a tool while you're still here. And, you know, it was a relief. It got them over the bridge. And that's a good feel story to tell.
That is a good story. And that's a good point. That I hope that we can talk about later. And I just want to mention that for anybody who is viewing this, if you have a question, please put your question in the comments, and we will address those after the presentation, but before we end this live stream. So please, if you have comments or questions, you know, put those in the feed. Glenn, go ahead. I think you have a story.
Yeah, well, Gina shared a good story. I'm gonna share a bad story there. When I was younger, I actually used to work in a funeral home for years as a kid growing up. And one thing that I would always recognize is how much stress that it would cause when a family would walk in the door. You would sit in there with the family. You would talk to them about their funeral arrangements, and then it gets down to start talking about the policy or who's going to pay for it. And you find out how many people in the family that either, you know, mom, dad, or whoever it could have been, grandmother, grandfather, you thought they had this policy and it ran out, right? Or like somebody didn't pay for it. And the, you know, grandparent for some reason, or parent, you know, quit paying on it 5 years ago, and then they find out this person no longer has insurance. And then now they're looking around at the family saying, we're going to have to pay for this funeral, you know, that's, you know, several $1,000s, and we want to send mom off right. And then it creates a financial burden, you know, on a particular family member or other people, you know, in the family that people have to put in. And imagine that is that you walked in and you think that this is something that's taken care of. And then you find out that it's something that's not taken care of. Plus you have to deal with the death of the family member. That's one of the hardest conversations to have with, you know, with doing, you know, funeral planning. However, one of the other things about this is just people sharing information that can help. I know, like life, like we talked about, is a little taboo, you know, to talk about it. But when you're having these conversations with your family members, it's good to let people know that you have policies and keep people informed, even if they're not on the policy. Is to keep them informed as to what's going on, to let people know that you have it, so then they know if your policy is lapsing or if you're missing payments, just to ensure that you're not going to be responsible either for someone else's death later on in life. And I think we're going to talk about this a little later, but you know, the GoFundMe world is not shouldn't be your life insurance policy, because you could be paying something, you know, cheap I mean, Gina talked more about that, but you could be paying things that are so cheap that can help you to make sure that your family is set up for the long haul. And I'll probably share another personal story a little bit later about people that done some, you know, some great things about having life insurance policies, where that conversation was a lot different. And it actually took people from a family from being very poor. So this is just a good story, but I've seen a family go from being lower middle class to a person had a great policy and they passed away, and it took their family into the 1 percentile. Just for holding a policy that was worth that was worth, I don't know, several $1 million. But it changed their lives forever. So pay attention to what Jen is talking about, and I'm really excited to hear, you know, all the information that's going to be shared.
Right.
Thank you, Glenn. And just again, before we jump into the presentation, just a couple of quick reminders. If you haven't already registered, please register. That's how we can get tools and resources to you. Please participate. Post your questions and your comments in the live feed. And I forgot to mention that at the end of this session, we always give away a gift. And that is based on participation. So please post your questions because you will get something for that. And so, Gina, I'm going to go ahead and turn the floor over to you so that you can take us through this presentation.
Okay, can everybody see? I just need a verbal yes.
We don't see your presentation yet.
Okay, 1 second. Give me a second. Let me undo my camera. Let me start my camera again. Cancel. All right, 1 second. Let me try one more time. Can you see it now?
Did you share your screen?
Yes.
There we go.
You see it now?
Yep, perfect.
Great, we're good to go. Thanks, everyone. Well, hello again. And if you're just joining right now, my name is Gina Coleman, Chief Sales Officer here at MassMutual Great Lakes, and I'm excited to be here today. And you know, the name of this topic is Understanding Life Insurance, and it's part of our financial well-being education series that we offer to the community and on work sites. And so welcome. We know that the route to financial education and financial well-being will be different for everyone. But regardless of what path you take, a strong grasp of fundamentals is imperative. So today, we're going to talk about the basics of life insurance to help you continue to build your financial acumen. While everyone's financial situation is different, life insurance can play an important part of many individuals' financial strategies. So our goal today is just to get you familiar with the purpose of life insurance and the types that are available to you. So keep a pen and paper handy. So if you think of questions and if you want to jot something down, you have it handy to refer back to. So before we start, let's get through some of the just technical stuff. I just want to point out that I'm simply providing information that's going to help you make decisions and be better prepared for the future. You know, what you ultimately decide to do with this information is entirely up to you. The session is intended only to provide you with some guidelines. Therefore, the information provided here is not written or intended for specific tax or legal advice. I'm not authorized to give you that, but you are encouraged to seek advice from your own tax and legal counsel. Now, if you're involved in estate planning process, you should work with an estate planning team, including your own legal and tax representation. Okay. So what is financial well-being? And I know that the Community Candor series is really helping to get you guys to a holistic financial place, you know, financial well-being. But what is it? You know, it's defined by the Consumer Financial Protection Bureau as, number one, having control over your day-to-day and month-to-month finances, having capacity to absorb a financial shock. I think a lot of us may have experienced that going through this current health and economic crisis. Being on track to meet financial goals, and having the financial freedom to make choices that allows one to enjoy life. Enjoying life can mean a lot of things, but maybe alleviating some of the stress related to financial management could be one of them. As we go through today's discussion on life insurance, we'll mainly be addressing the second bullet, having the capacity to absorb a financial shock, since life insurance is primarily designed to provide for your loved ones in case of an unexpected event. However, we'll also touch on how life insurance can help you stay on track to meet financial goals, as well as have the financial freedom to make choices that allows one to enjoy life. So with that, let's begin. What is life insurance? Some of this territory may be familiar to you, and there may be an opportunity for you to hear something you haven't heard before. So we'll talk about what life insurance is, who may need it. We'll talk about the types of policies and insurance policies available to you, specifically between term and permanent life insurance. Finally, we'll talk about things that you might want to consider to discuss with your loved ones as to whether or not life insurance is right for you. Life insurance is a financial product in exchange for timely premium payments, pays a death benefit when a person who is insured dies. This death benefit is paid to the policy's beneficiaries and is received by them, generally speaking, income tax-free. But if you have people who depend on you financially, a life insurance policy is much more than the technical definition that you see in front of you. Life insurance is, in essence, financial security for the people you love. I just mentioned that life insurance can be financial security for the people you love, but what do I mean by that? Honestly, I can't tell you what that means. That's because financial security for your loved ones can only be defined by you. Perhaps it means that replacing your income for a certain number of years. Maybe it means giving your family a fresh start financially, one without debt. Or maybe it means helping your loved ones take advantage of something in the future, like attending college without the burden of student loans. However you decide financial security for your family and your loved ones, one way of helping them to reach their goals can be with life insurance. Of course, now I need to add a disclaimer. So after the beneficiaries receive the death benefit, what they do with the money is entirely up to them. You can tell them what your intentions are, but once they have the money, only they can decide how they ultimately use it. So who should consider life insurance? Obviously, anyone who has people who depend on them financially. Many people think of life insurance as a necessity only when they have children. But the reality is you may have lots of people who depend on you. Just think about that. Think about that today. Who currently depends on you and your ability to earn and provide, that if something was to happen to you, how would they be impacted? Other than the obvious, whether it's a spouse or children, other people like a parent who is getting older may not only need financial support, but physical support as well. So think about who in your life really does depend on you and what need they may have in the future. It may be more people than you think. Even if you don't have any financial dependence now, consider you may have them in the future. For many young people just starting out and looking to build a financial foundation for the future, life insurance might be an attractive option. And when you're young and healthy, that is when the premiums are likely to be the least expensive and the best time to lock them in. So let's talk about the two types of policies. You'll hear term and you'll hear permanent. Sometimes you may hear permanent being referenced as a whole life as well. Both types of policies serve the main purpose of providing protection in the event of the death of the insured. However, the way they function is quite different. So let's start with term. Term life insurance, which provides death benefit protection for a certain number of years. That's why they're called term. And they're going to be the one that is the lowest premium. The most popular policy types are a 10-year or 20-year term life insurance policy. Some companies offer 30-year terms. These policies offer premiums that are guaranteed not to change. That's the premium is your monthly payment, or if you set it up quarterly or annually, but your premium is your payment. At the end of your term, you may continue coverage, but premiums will likely increase after that term limit is up. The longer the guaranteed level period, premium period, the higher the premiums will be. This is because as you get older, insurance costs increase. The insurance company calculates a level premium that will cover all the costs over the term period. There's also an annual renewable term. They call those ARTs. It's ART, A-R-T, policies available, where the premium covers 1 year of coverage at a time. These policies generally start out with the lower premium than level term, but become more expensive after only a few years. In general, ART only makes sense if you're only going to need coverage for a very short period of time. So let's talk about what makes a term before we get into permanent. You can look at a term insurance like renting a place to live. You pay to have the policy for a specified amount of time, but once the policy expires, you don't own anything. It's like renting a place to live. Now, the other type of insurance is called permanent life insurance. Permanent life insurance is exactly how it sounds. It's permanent. The insurance coverage lasts you your entire life as long as you pay your premiums and don't allow your policy to lapse. Some permanent policies offer premiums that are guaranteed not to increase over your entire lifetime. Finally, permanent life insurance policies can also build cash value. And we'll talk about the cash value in detail in just a few minutes. But if term life insurance can be compared to renting, permanent life insurance can be compared to owning. So let's look at the comparisons right here on the screen. So term insurance is low cost and has generally an income tax-free death benefit. Permanent insurance generally has a higher cost than term, but you can keep coverage for a lifetime. Permanent insurance also generally is income tax-free death benefit. But unlike term insurance, permanent insurance includes lifetime protection, and most are designed with the potential for cash value accumulation. There are some policies that, while technically have the potential for cash value accumulation, some are not designed to do so. But in this presentation, we're going to discuss the benefits of owning a permanent policy that is designed to accumulate cash value. So we built our financial lives over time by acquiring various types of assets. This includes homes and cars, other financial assets such as bank accounts, investments, and retirement accounts. In addition to the death benefit, the cash value can also be considered a financial asset that may be available to you. If you own a permanent life insurance policy designed to accumulate cash value, the cash value can be used for retirement planning, college funding, or as a source of cash or credit, similar to what I discussed in the story that I shared at the beginning of the session. There's no restriction on what you can use your policy's cash value for, so it can be used to meet any of your financial needs. So let's discuss how permanent life insurance can fit into your overall financial plan. People often assume that their need for life insurance ends when they stop working. However, a permanent life insurance policy can provide additional financial security for you during your retirement. Think about that. First, the death benefit of your permanent life insurance policy can be used to help fund the surviving spouse's and partner's retirement and lifestyle. Second, the cash value can also be an alternate source of income that can give you the flexibility to manage, give you the flexibility to manage your retirement income more effectively at different points in your retirement years. So with access to the policy's cash value during your retirement, you can use it to supplement your existing retirement income stream periodically to take advantage of any opportunities that may arise. You can withdraw less of your income from your retirement accounts, especially during periods of negative market volatility, when it's more advantageous to limit your withdrawals, right? So, the economic downturn that we've experienced, you want to leave your money in those so you won't make those losses permanent. And so maybe this cash value in your policy gives you that flexibility. Have more flexibility so you can use your other retirement assets more effectively. Basically, this is giving you choices and options. The cash value of your life insurance policy can also be used for college planning. First, the life insurance policy's death benefit can be used by your loved ones to pay for a future college cost if the need arises. Second, your ability to access the cash value of a life insurance policy may allow you to limit the number of student loans required to pay for college. Lastly, the cash value of a policy can be used to supplement your existing college funding strategy. So for example, the money included in a college savings plan, such as like a 529 college savings plan, it has limitations of what expenses can be paid for with these funds, right? Qualified expenses such as tuition, room and board, books, and the like can all be paid by your 529 plan. But what about all the other expenses that are not considered qualified? The cash value of your life insurance policy may be a great way to cover those costs using those assets. So what else can a permanent policy do? Planning for retirement, planning to pay for college strategies that you develop, and in which you can include plans on how to supplement those with permanent life insurance, cash value. But outside of those plans, the potential cash value that your permanent policy accumulates can also be an additional financial resource during a time of need. For example, it can be a source of emergency funds. It can help cover the cost of healthcare services. Maybe you want to fund a business, or just take care of any of the needs of your family. Okay, so now you've gotten some of the basics of term and permanent insurance. Let's talk about how much life insurance you might need. And here's how you need to consider it. Think about it. Start with your goals. What do you want the death benefit to accomplish? Is it to replace your income if you're not here? If so, take your income and multiply it by the number of years you think is appropriate. Is it to eliminate debt? Many people will purchase a policy in the amount equal to their mortgage. How much you'll need really depends on a number of factors, including your goals, your income, and your debt. And you may also need to factor in your employer provided benefits that your family wouldn't have without you. And what about unpaid services you provide, like childcare, elder care, cleaning, transportation, home repair, a bunch of things that we don't think about that are services that person in the household is overseeing and taking care of. When you consider all the unpaid services being provided, it may become very expensive if it was necessary for your family to hire someone to perform those tasks. So how much life insurance you need is a complicated decision. And you should talk to your financial professional and they can provide you with additional guidance. There's also a great resource called lifehappens.org. There you will be able to actually calculate your insurance needs. It's a great calculator. It's a it's under a nonprofit organization, lifehappens.org. Okay, so employer provided life insurance benefits. Most people will say, I'm covered by my employer. Employer provided life insurance is a great benefit that many companies offer. However, many people may not consider whether their employer provided policy really provides all the coverage they need. So consider that employer provided life insurance may not provide a sufficient death benefit to meet the needs of your family, you and your family, that maybe you discussed as you were listing your goals and what you would need a policy for. The policy may not be portable, meaning if you change jobs, you may no longer have access to it. You may not have access to a policy right now if you were furloughed or laid off from a job during this health crisis the country is going through. Since your employer controls the details around the policy offering, the policy benefits can be changed, reduced, or even dropped. Premium costs are not fixed, so premiums can rise each year. All of these factors need to be considered when you're thinking about how much life insurance policy you may need. So if you do decide to purchase a life insurance policy on your own, there are some benefits that go along with that. You can supplement the life insurance you do get from your employer, your own policy, and you own the policy and you can take it with you if you leave your job. And you have a lot more choices on what types of policies you may want to purchase for your unique family needs. So we're coming to the end. So let's review your life insurance. I'm sorry, excuse me. Let's review where we are today and what we've covered. If you already have coverage, great for you. But you'll want to review it regularly and make sure it still meets your goals. So consider, if you already hold a policy, how long have you had it? Have any of your life events recently occurred? Do you have kids now? Do you have a new house? Were you recently married? Or were you even recently divorced? What future life events are expected or already planned for? Has your health improved? If at the time you got the policy, you were a smoker and you no longer are a smoker, that may lower your premium. Are your beneficiaries up to date? Is someone that is no longer in your life a beneficiary? Is your financial professional still active? If you got a policy 10 years ago and you haven't talked to the person who sold you that policy, see if they're still in the business. There tends to be a lot of turnover in this business. Make sure your policy is getting serviced. Has your carrier maintained its financial strength? And that last point is really important. Reliable life insurance companies are generally rated on financial strength by several rating agencies. These include AM Best, Moody's Investor Services, Fitch Ratings, and Standard & Poor's. Financial strength ratings are a key indicator of a company's ability to meet its financial obligations. If you're going to have a policy, you want to make sure that when it's time for that policy to be paid out, that company is going to be able to live up to that. You want to make sure that company has solid ratings. Okay, now our final review. We covered a lot of information today. And thank you for joining, and kudos to you for taking the time and trying to take ownership of your own financial well-being. As we close, let me quickly summarize some of the important topics we discussed today. Providing financial protection for your loved ones is a critical consideration. Think about what type of policy best suits your needs, not your neighbors, not your coworker, your needs and where you are today and where you're trying to go. And whether it's term or permanent, or maybe a combination of both. Some permanent life insurance policies have the potential to accumulate cash value that can be used for any need, including retirement planning or college funding. And most importantly, ensure your life insurance policy meets your current needs. Always review. Always make sure that it's covering the point in your life of where you are today. I am so happy to have been able to provide this information. You'll see my information on the screen. And I'm looking forward to the post discussion.
Thank you, Gina. And we're just going to pop everybody back up on the screen. And Gina, if you can unstop your camera so we can see your beautiful.
There you go.
It works. Excellent. So thank you so much for going through that information. That was packed with a lot. And
Yeah.
I just want to, the thing that really stuck out to me is that cash value accumulation. And I mentioned that earlier near the introduction. Mm-hmm. And I don't know if the average, person on the streets really understands the fact that, life insurance, the only reason to get life insurance is not just to cover, an unexpected death. Yeah. There's so much more value that a life insurance policy can add, to wealth building as it relates to, family planning, individual planning. And so, that's so important that you talked about all of those things, but especially the fact that it's not just about covering death-related expenses. Yeah. And so we've got, I've got some questions while we're looking to see the questions that are coming in through the live feed. Again, if you have questions in the audience, please post them and we will make sure that they are addressed. In the meantime, I have a couple of questions that I want to start with. So I think that there are some common misconceptions out there about life insurance. And I'd like to open the floor, maybe just to give you a quick break, Gina, and invite Glenn to maybe talk about what some of those common misconceptions are related to life insurance.
Yeah, I'm not going to die. Like, that, I know it's funny, but that is a common misconception. It's like, we all, people think that, our vanity is never going to run out, that we'll forever be there. And the way to not die is to leave an inheritance, or leave trust or leave things like that, as far as for long term. I think one of the other misconceptions is if I get life insurance policy, somebody's going to try to kill me. Now, that, like, that's one of those misconceptions of, like, if I tell my kids and I get older, they're going to try to take me out to get this policy. And, you can't think of it that way, because the policy really is for, your family. But you can also use it. I think Renee mentioned it earlier. Another misconception is that, the benefits of it right now is that, say, if you have a young child, and you're a fairly young person and you're a kid. So, like, right now I have a 18-month-old daughter. Just say if I started a permanent life policy right now, that I was going to use as a financial planning tool to make sure that her college was paid for, I could do that right now over the next 18 years, and by the time she reaches college, just off that life insurance policy, that there should be enough money there to be able to help assist in paying for her education. And that's what Jenna was mentioning earlier, is that there are things that you can set up for your now. And then Renee mentioned that, a little bit earlier as well, is that, you can take care of some things in the future. So it's never too late. It's never too early to get started. And it is, I'm not going to say it's never too late, because, if somebody dies, then it's too late, right? But there are policies that you can get. And I think that's what else people feel like, oh, well, I'm older now, I'm just going to save as much money as I can. I'm not going to get a life insurance policy because it's just going to be so difficult. You'd be surprised what type of policies you can get for, 25,000 or $50,000 policy, that you can actually just cash out and pay, right up front. There are so many opportunities for you to structure your life for the future, for the long haul. And you have to start now. So don't wait. Start and continue to look for ways to bring to get the life insurance policies that you need, because not only will they protect you, but you can also have them to protect your business. One of the other misconceptions is, I can't afford it. And I think probably Jenna probably speak more to that, but based off your situation, I mean, there are so many different styles of policies. And she mentioned that between term and permanent life, right? And that term is basically you're renting space. But guess what? If you rent an apartment, what's the difference than renting your life? Like, there's no difference. The only difference is that it's going to be renting. You're going to be renting insurance, which is going to be way more valuable than renting an apartment at the end, right? If you have any assets. So I think it's also getting over the misconception of, I don't really want to pay for this because it's just going to cost way too much money and it's just not something I want to invest in. And just a great investment for you to have. So don't think that life insurance is not needed, because it is. And it's something that actually provides you security in life, because sometimes we go around not doing things in life because we're afraid of dying. So you don't make certain decisions based off of that. But if you know that your life is taken care of, it can, make sure that you die. I'm sorry to be using this, but, I think that's another thing, is that people don't want to talk about death. That's one thing that is so heartfelt, is people do not want to talk about death. But it's fine for you to talk about it, and it's fine for you to have a conversation about those things.
All good points. And Gina, just really quick, we got a question that just came in, and so I want to share it and make sure that we get this answered.
Yeah.
Can you talk a little bit about a parent's ability to get permanent or burial policies on their adult children?
Yes. Anybody, yeah, you can get a policy on someone else, even if they're an adult. I just did one for my daughter. However, they're going to go through an underwriting process and they'll have to sign off on it as well. And so you can't just get a life insurance policy on someone without them knowing it.
Good point. And why would you want to? But we're not going to go into that.
Right. But that's the key. If you want to buy a policy for someone, whether they're adult children or another adult, you have to get their approval. They'll have to go through the underwriting. And so, yeah, that's the quick answer.
Renee, we are having a candid conversation. So, I mean, it definitely is fine to say, if somebody calls you to ask to get a policy on you, don't, don't think they're trying to kill you. I mean, but also realize that people are just trying to, if something does happen to you, that things are being taken care of, long term.
Well, usually there's a reason. There's got to be a connection. Business owners does it. If you are in business with someone, you'll find that they will have some policies, whether it's in connection to the business or that other person that's bringing that intellectual property to the business. There's different scenarios, and this is why financial professionals exist, to walk you through what's going to be the best thing for your particular circumstance.
Absolutely.
And Renee, can I just jump on, as far as, Glenn mentioned that people don't think that they can afford a policy and that's why they feel like they're limited. Um, Life insurance is just one part of your complete financial picture, right? And so, what I would encourage the audience to do is to sit down with a financial professional. And you have nonprofit organizations that will do some financial counseling, but really is start to really just take inventory of what's coming in, what's coming out, really going in and defining what are your goals. When do you want to retire? Answering all these questions. You need to take the moment, like we go and we get a health checkup, right? We get a whole health checkup, and then we come back and we get our results and we get our plan together. Take the time to do that for your finances. We work with clients all the time that they may not be able to afford a life insurance policy, but we're not talking to them about just their life insurance. We're having a very holistic conversation. And like, okay, let's work on, then maybe the first step is let's work on your budget, right? Because you may need to really make sure that you have 3 to 6 months of savings, right? For emergency savings. You may need to get control of your expenses. You may need to figure out ways to grow your income in order to reach the other goals that you want. So if a goal is I want to be able to have a permanent life insurance policy. Well, what do you need to do on the front end to help you reach that goal? It's holistic. Don't look at it as a single product or a service. Look at it as what are the things that you're going to need to help you reach the goals that you've identified as important to you and to your family.
Those are all great points, Gina, and I thank you for mentioning those, because it really kind of comes full circle in the topics that we've discussed and have been discussing through this series about creating an emergency budget, creating an emergency savings through having a budget in place, reaching out and talking to professionals about your retirement plan and putting those things into place, and really understanding that it's about creating relationships and not being fearful of talking with others about your financial goals, where you are today and where you're trying to go, because that's the best way for you to start to meet some of those goals and use some of the tools and resources that are available to help you get to where you're wanting to go. And so I think that's a good segue into this next part about reaching out to insurance professionals, creating that relationship, understanding, all insurance companies and all insurance policies are not the same.
No.
So maybe you can kind of speak to that, Gina, about what families should be, what questions they should be asking and what they should be looking for.
Yeah. One thing about these sessions, including today's, it should be providing you tools and resources for you to come up with questions that you want to first sit down with your own family and decide, if it's individually you or the people that rely on you, or your family as a unit. Identify your goals. And as you're accumulating this information, you need to have your questions ready. Be empowered. Like we go to the doctor. If you don't feel comfortable enough with the person to share exactly what your concerns are, exactly where you're struggling, and if you're not ready to be transparent, you're doing yourself a disservice. And if you don't trust that person enough to have that conversation, then interview a few financial professionals so that way you do, because that's what's ultimately going to get you on the road to success, is to being transparent and trusting that person to help guide you. But first you have to take inventory for yourself and realize exactly what is it that you're trying to do, and think about it in the short term and think about it in the long term. What you're doing right now, do you want to do it until the day you die, like in 65 till you retire? Is your goal to retire early? So you want to live your retirement years on your own terms. Those are things that the earlier you have that conversation, and the more transparent you are about it, you're going to arm that financial professional to help take what their knowledge to get you there. And again, you already mentioned so many different policies out there, so many different retirement platforms or investment platforms. They're going to be able to then come back with a recommendation that suits your individual needs.
Thank you, Gina. And before I move on, Glenn, was there anything that you wanted to touch on?
Yeah, I know there was one question I think was sent about the planning of insurance with the state attorneys. There is so if you're afraid of wanting to know what's going to happen with your money, right? There are ways that you can talk to your insurance agency and a financial planner to set up a trust account where your money is then put into a trust, where then you can provide the parameters for how that money is spent in the trust to get dispersed out to your family that a trust advisor can oversee, or you can set up a committee of individuals that can be on this trust. So if there's aunts, uncles, cousins, or if there's a trust advisor, that you can build that certain parameter out. That's why sometimes you'll see where families that have family trusts, and either donations are given out of it if it's set up that way. So you can even set up a trust, or you can use your insurance policy to give to a certain cause, or you can set up a trust or a donation to be able to give to your family as well. So for example, I know someone, they passed away, they had several $1,000,000 that they left and they put into a family trust. They put a trust advisor over it. They put language in it that the money can only be dispersed to pay for bills, that can pay for, emergency situations, lights, whatever those things are. But that money now basically, that trust person were able to just make sure those checks were cut either on a yearly or monthly, however, it gets cut, to make sure that that family is successful long term. So I just wanted to make sure that I brought that out as well. So when you talk about the permanent and the term life insurance, you could set them up on the back end where they can have special instructions if you don't believe in the people being responsible to spend your money.
Yeah, there are out there, and that's why it's good to have, estate planning attorneys or an accountant, people that's going to be a part of your financial board of directors, right?
Yep, absolutely.
That they're working in unison with your needs. And that's another thing. Your goals need to be shared, or, if you have an opportunity to bring all those parties together at the beginning of a planning, so everyone's sort of on the same page, that's really like the best way to handle it. Especially if you're dealing with significant numbers, in more complicated situations.
And I just want to add to your point, Glenn, and to your point, Gina, that this conversation that we're having about life insurance, permanent term policies, trust services, things like that. If that's foreign to you, that's okay. But you should understand that this is actually accessible. You don't need to we're not talking about people who have $1 million policy only being able to access these resources. These resources are accessible to everyday people. And the cost it's not cost prohibitive. So I want to make sure that, we're clear in stating that what we're talking about is not beyond reach of anybody.
Nope. Nope. And believe me, and whoever you decide to sit down with, for this conversation, make sure that you're sitting down with someone that aligns with your situation. So if you go to someone that, I only deal with people who earn $1 million or more, then that's not the person that you want to talk to, right? And you shouldn't feel intimidated. You shouldn't be fearful. And again, there's many people out here that do this. I love doing this because I love being a resource for our community. you should make sure you're having these conversations with someone you trust.
Absolutely, absolutely. So just as a reminder, your host, Communities First. Our motto is empowering people and building communities. And the reason why we're doing this series is because we want to make sure that everybody in the community is aware of and has access to these resources. So nothing that we're talking about is out of reach for anybody. So I think that, wow, time has kind of flown by here. But we've covered a lot of really good information. And, we've talked about the different types of life insurance and talked about the different ways in which you can use life insurance. It's a way for you to control, your investments and your money, not only when you pass, but also allows you to use some of that benefit while you're here. It's accessible, and it's something that you should really be having a conversation with everybody in your family, and it should be a regular conversation. Not just one time. Well, remember 10 years ago when we talked about things change. So, at least yearly or every other year, there should be a conversation about, this topic. As difficult as it may or may not be, you want to be in control of, your finances. And so I'd like to just open up the floor one last time and allow Gina and Glenn to share any takeaways for the audience.
Well, thank you. I just want to say thank you. And look, you may have questions. Just don't hesitate to reach out. I'm here. I've been in this industry a little over 9 years. I have resources that I can provide people and other people to connect with. So just don't hesitate to do that. If you have a question and it's on your heart, reach out.
All right. And yeah, so thank you so much, Gina, for sharing this information today. I mean, it was definitely helpful. I'm seeing some of the comments that's been coming in for people that's saying, thank you for the information. Should I reach out to Gina? So, we've been responding back to that with your information. So as you see, Gina's information just popped up at the bottom of the screen. So feel free to reach out to her. It's always the right time to do the right thing. You know what I mean? And so right now, the right time is to do the right thing. And that is today is to pick up the phone, give Gina a call, talk to her so she can guide you into some great information that you may need. And we just known Gina for a very long time, and she's just a great person, great individual that's really looking just to help individuals and people, not because it's about her, but just because it's about what it's going to take. Most people don't know, but most wealth is transferred in America each and every year through insurance policies. And so if you're trying to figure out, where does this financial and wealth gap come from? This is one of the places where I'll just speak to minorities right now, where the minority community normally lacks. And the reason why there's lack there is because of, one, we don't want to talk about death, and for two, we feel as though that the information is unattainable for us, and we feel like it's too far out of reach. If you have cell phone insurance, you can have life insurance. So just like you rent, how right now, like you have these iPhones, like I have, an iPhone as well, right? Some people buy them, some people lease them. So if you lease, because that iPhone is not going to be leaving you a policy at the end of your life. And if you're leasing that for $100-something a month and you don't have a policy for at least that same amount, then we're going to have to start talking about priorities. But
no judgment, though, just advice. No judgment, just advice.
Yeah, right, exactly. This is not a judgment. This is no judgment zone.
No judgment zone.
Yeah, no judgment zone, right? I guess it's a little Planet Fitness in here. I don't know. But please, pick up the phone, get the information that you need, start the conversation. There is no reason for you not to have insurance within the next. I'm just challenging you, have insurance in the next 30, 60, 90 days, get it taken care of, get something going.
Absolutely. And I'll leave a final statement in the wise words. This was shared with me from a wise person, Essence Wilson. Leave a blessing, not a bill.
Right. Great advice.
Right. Fantastic advice. So as we wrap this up, I just want to share a couple of things. So I mentioned that we were going to be giving something away to a participant. Tamika Gilbert Cordell is our participation winner. So I'll say that one more time. Tamika Gilbert Cordell. If you can please inbox us so that we can get you your gift. Thank you for your participation. I hope that you also hosted a watch party and shared this with your friends, because that's how we get this information in the community, as we share it and we start having these conversations. So this is not the end of our series. We have 2 sessions coming up that I want you to mark your calendar for. So next Friday, we'll be talking about investments and strategies for your small business so that your small business can succeed for years to come. And then after that, we will be talking about identity fraud, safeguards for individuals and families. So there's a lot of, scams out there. We're going to be talking about how to keep you and your family and your information safe. And so as we sign off, I want to say thank you again to Gina Coleman, Mass Mutual Great Lakes, for joining us and providing this great information. Thank you, Glenn Wilson and Communities First, again, for imparting this knowledge and information onto the community. And these presentations, as you know, will be on our site and can be viewed and shared anytime in the future. So thank you.
Thanks.